Hi there, this is Chris Flook. We're recording this from home and hope you're all keeping safe.
I'm Ryan. We hope you're all well. We thought we would send you a market update and a bit of an update on what's happened in the last little while. And so we'd show you what's happened in markets. From February, we had a fantastic run through to February. 2019 had amazing performance. And at February, the ASX reached an all-time high of 7,255. When it became very apparent that COVID-19 was going to be a global problem, markets have dropped. They reacted very abruptly. And by March 23rd, the ASX had dropped to 4,564, a total drop of 37% in such a short time. Since there's been a little bit of a realization that we're not going to get completely wiped out, we'll be able to sort this out, markets have recovered through to 30 April, where it was around 5,600 net, and that is about a 22% rise from the bottom that it reached. Similarly, the Dow Jones in America responded quite abruptly, and so from February 20, when it equally hit an all-time or hit a high of 29,551 through to March 23rd, which we were in sync and decided that was the obvious bottom. It went down to 18,591, also a 37% drop. Now, since then, the Dow Jones has recovered a bit better than Australia and has come back to 24,345, which is a 31% increase compared to our 22%. And at the moment, we're seeing the market starting to settle down a little bit. There was a lot of abrupt fear in the market initially, and that's what caused such a aggressive sell down through March.
Well, infrastructure and property have been impacted, as has the rest of the market. Areas that have been really hit, things like Sydney Airport, where flights, overseas flights have been halted, semi-permanently anyway. Hotels, accommodation, gaming, etc. With the restrictions on shopping, we've seen many shops closed inside of the larger centres, and that's going to have some impact on some of the listed property funds. Not all, but some. Some are focused on shopping centres, others have been diversified into CBD buildings and the like. So that's going to be a sector that's going to be have mixed results. Infrastructure generally, toll roads are down 40% of usage with the travel restrictions being in place, and that's obviously going to affect the likes of Transurban. But when the market does turn, there's no reason to believe that those stocks I've mentioned won't regain their previous prices. At the same time, gas, power, etc., those utilities have been sold down. There's no real reason for that, and I think the herd mentality has taken over some of the logic there. So it's still a sector that we're supporting, and we think it's a long-term part of everyone's portfolio, and we see those assets as being the cornerstone of strong portfolios into the future.
Another area that we wanted to outline to you is that in the last month to month and a half, governments have responded very aggressively with incredible stimulus packages. As many of you would have seen a lot of the information on the news, we just wanted to highlight a few things that have been regular questions to us. One being that there's an economic payment that was made last week. The first payment was made last week for $750 to anyone who is a recipient of a pension from Centrelink or the Department of Veteran Affairs, but also to Commonwealth Seniors Health Card holders. So you may not be eligible for an age pension, but if you're a holder of the Commonwealth Seniors Health Card, you will also have received that $750 payment. There is a second payment that will be made on July 10th. A few of the other major areas of stimulus that have been opened up the government has allowed access to super for accumulators. So in particular, if you've lost your job or you've had reduced hours, the ability has been made for us to draw out up to $10,000 before June, and potentially again another $10,000 in the first quarter of the next financial year. We've noted that many of the applicants already and people who've registered an interest are younger. Many are under 30 with lower balances in super. We're concerned and we're yet to see what that kind of impact will have on a number of super funds. Finally, too, the job seeker benefits for those that have lost work have been expanded to allow for more benefits even if a partner is earning an income still. So if one person's lost a job, previously, if your partner was earning around about $40,000, you weren't able to receive any benefits. They've doubled this so that you can receive some benefits right up to your partner earning about $80,000, still get some sort of claim from Centrelink. So that's a lot of positive things there. Another big area that we've received some inquiries around is the pension payment changes that have been announced. So what does that mean for you? Many of our clients who are pensioners are drawing out at the minimum required amount per year. For example, if you are in your late 60s, that's 5%. And what that means is based on your balance at 1 July, we set, or the super fund sets, the pension payment at 5% of your balance. So for example, a super fund or pension account that had a balance of $350,000 at 1 July, the annual amount that has to be paid out, minimum amount, is $17,500, which is that 5%. The government has recognised that in the second half of that financial year, this where we are now, there's been quite a market movement. Some clients are more aggressively invested than others, and they've allowed the minimums to be reduced. The reason for this is so that people are not forced to make payments, especially if you only pay maybe quarterly or half yearly or even once a year. You might be waiting till June to take your total payment for the year. They're allowing your payments to be reduced by 50% for the whole year. So clients that are going to take one payment in June, you can now apply to reduce that payment to half of what it was going to be before. So for that example, $350,000, instead of taking $17,500, you could take $8,750. Of course, that's also dependent on your cash flow needs, provided you are not putting yourself in any jeopardy. And these payment amounts are flexible. If you're on a monthly payment, so we're reducing to the new minimum so that we don't have to draw down against the account while it's reduced, while the balances are reduced. Now, the new minimums will also apply for the next financial year. If you're taking the minimum payment already and you don't make any changes, at 1 July, whatever your balance is then, they will apply the new half or 50% rate to your minimums. So if you were on that 5% and you don't want to change, you need to contact us so that we can update that with the fund. Lastly, age pension recipients. Super funds do report to Centrelink twice per year in February and August with an update to the balance. With the recent market changes, that's meant that a lot of funds reported in February at the market high, and many of you would have received a notice telling you what your new balance is. If you're tested, asset tested, and you're on a part pension, in March, many super funds have updated again with Centrelink because there's been such aggressive market movements. Now, if you're concerned that you haven't had an update and that Centrelink is still looking at your higher balance from February, feel free to give us a call and we can work through that with you and help you with anything that you need there, with any of the reporting needs to give to Centrelink.
Well, folks, that concludes our little presentation. We hope you're all keeping safe, and we look forward to better market news for you next month. Cheers for now.
Cheers.